What's going on, everyone? In this video we're going to talk about the forex call out I made in the video from 2 weeks ago. So I'm going to explain how I managed this trade, how I got in, where was my stop loss, as well as my limit order to sell. So we were looking at this British pound Australian dollar market, which very, very long term is bullish, but from like April 2020 it's downtrending. So we had this consolidation box right here. So we entered this consolidation box, and what I do when the market consolidates, I always draw this rectangle, and you will see why it's helpful. So as I said, well, because this market overall is bullish, but in the short term is bearish, I couldn't really tell if this consolidation wanted to go up or down. That's why I have a plan for these types of consolidations, which I'm going to explain. So right here, if the market wanted to go higher, I would wait for a higher high within this consolidation box. I'm sorry, a higher low within this consolidation box. If it wanted to go lower, I would wait for a lower high. So let's see what happened. So the market consolidated. Then it's it's kind of tested these lows, the lows of the box right here. It bounced, and then right here, arguably there could have been a lower low right here, but there's no entry because I need to explain first of all how I enter. So when I enter, I basically wait for a 4-hour candle to close above the to close. It's very important to close above the ultimate high of the previous two candles. So in this case, the ultimate high was right here, and this candle closed right here. So there's no entry in this setup. Next candle, didn't really close above. Consolidated, went up. Then it went even higher, but at this very moment it made a higher low and we got an entry. Why? Because so this high is lower than this high and we have an entry. So this candle closes way under this ultimate high of the previous two candles, which is here. So this was my entry. Now I'm going to talk about where I would set my stop loss and where I would sell. We'll lock in profits. So for stop loss matters, I would put my I put my stop loss above this high right here. And my targets were very simple. I just look at the areas. So we have this support right here. So so this is our first target. Let me draw it in another color. Yes. So this is the first support. Where could we sell? Well, as a second target, I would say right here. So let's check our risk to reward ratio. So in this case, it would be a short. I took a short position on this candle. So let's say I entered at the close. So it opened in this one. My stop loss was about 1 ATR above this high, and my first target was right here. So we have a 2.63 and 1 ratio, and if we take this one, it would be a nearly 4-to-1 ratio, which is very good. I always take trades which are above 2.5. So it's all about opportunity cost. So let's see how it played out. So I enter right here, stop loss right here, first target right here. So it dropped, and straight forward, incredible move. Just you can't really ask for a better move than this one. And in this case, the Fibonacci wasn't really helpful. I don't know why I put it here. Let me remove it. Yeah. So basically, now I'm going to recap the strategy. So when you have this consolidation, look at the overall market and the short-term market. So step one, look at the overall market. It's bullish, so you always have a chance that this could make higher highs. But in the short term, it's bearish. So you wait for not a breakout, because you could have gotten faked out right here, whatever. You don't wait for a break of the consolidation box or the lowest low. You wait for a higher high, well, I'm sorry, higher low or lower high within the consolidation box. In this case, I went short on this candle, and yeah. So now let's talk about the entry. The entry is, well, in my opinion, I always use the current candle to close above the, well, in this case underneath, because I was shorting, but above the ultimate high of the previous two candles. So let me give you an example. So I already gave you this one, but look, so the ultimate high of this candle is right here. This candle closed right here. This is an entry for me. This is an entry for me, and it's, yeah, it's pretty clear for me. However, in this case, it didn't really work out. So why didn't I enter here? Well, because this candle closed at the same level as this candle, and wasn't really showing signs of a bearish momentum. Well, this kind of, yeah, buyers and sellers all over the place. And then we got this consolidation, small volatility. Then we had this rejection, boom, stop loss, 1 ATR above these highs. I'll make a video on how I set my stop loss. Then it was basically straightforward. So not all trades work like this, obviously. This was a I would say very glorified trade, which worked out pretty well, and that's why I always make sure to have a plan, and to have a good risk to reward ratio in all situations. Then for the sell part, it's very easy. You basically look at key levels. In this case, it was here, and the lowest low was right here. So yeah, in this case, it actually got lower, but I locked in my position when it started to consolidate right here. Arguably, I could have set a trailing stop loss 1 ATR above this limit, well, I'm sorry, this horizontal line, so right here. But that's all hindsight, and yeah, that's it. So I hope you liked my forex breakdown. I usually don't do forex, but when I see a setup like these, I mean, I take them, because why not, you know. And yeah, that's just it. So I hope you liked this video, and I'll see you in the next one.